Hello. Can't hear you yet, Jamie. Hello, Jamie.
Okay, well, I
There
just
we go.
realized that I had my mute button
You're good.
pressed. Okay, well, everybody, thanks for taking time out of your busy day to come listen to Steve and I for another session of Office Hours on this May 2nd. Hopefully, April is well behind us tax-wise. I hope everybody's over that pain, and now we can focus on the the rest of the year so that we can make some money for ourselves. Okay, so before we get started here, just need to do the lawyer speak. Just want to make sure that everybody here is aware of the fact that we're just a publisher of information. We're not registered investment advisors, so if you need something like that, please seek out the appropriate representative, and please do not take anything that we share with you here today on an educational basis as a solicitation to buy or sell. Okie dokie. So moving right along, just want to give everybody a little peek at the Holly graph. As of Steve, do you know if this one's updated today or was this as of?
I do not know if that one was updated today. I can take a quick look. I don't believe
Friday.
it is. Yeah, I think it was updated Friday.
So real
That'd be the
quick
case.
here, just to get
Very
a little
close.
peek, it shouldn't be that much of a difference seeing the performance today. So I'll just kind of superimpose this one up real quick. So we are going to take a little bit of a curl back here, but still maintaining a nice gap there between our performance, or Holly's performance, I should say, and the S&P. So still looking good there.
Yep.
And of course, this was for the month of April as well, which, I mean, you know, you don't have to be an expert chart reader to realize that we're on the right path here.
Yeah, some people were complaining it's been a tough market the last week or so, but it was a good month for our old Holly there. Young Holly, I should say. She's very young.
Yeah, it was. You know, Steve, I'm getting that from the people that I stay in contact with around the trading community. A lot of bitching, a lot of moaning. But, you know, if you're operating within our sphere and talking to our users, it's just business as usual. So a lot of our clients are not experiencing that grumpiness, which is, hey, mission accomplished. That's what we're all here to do.
I agree.
Okay, so if everybody can see, you know, more or less the agenda today. You know, we've talked about this in the past. We'll play on words. You know, Steve kind of started coining the term Holy Trinity when we're talking about the three components that we're using in the trade ideas methodology these days. And of course, Dan liked to put a little bit different of a spin, and I do like this. We're going to talk about using the Holly Trinity. And what is that? Just to recap, it's A, where we find the action using our top lists and alert windows,
Including
then
Holly.
including Holly. Holly is just yet, now granted she's a very advanced alert window, but still just another high quality information source, we could call it. And then, as Steve likes to say, we look at the footprints in the sand, we consult our charts, and to make sure we don't miss out on that pent-up opportunity, we're going to be using our limit alert windows. So once again, this is a methodology. Number one, it's very simple. And number two, if you use it with consistency, you will see results. And of course, we're always going to talk about Holly's trading today. And we'll get into some of the, you know, Mike was asking if we could do a demonstration of a back test using the other filters to optimize the strategy. So hopefully if we have time at the end of the session, we will get to that as well. All right, Steve.
Yep.
I know what you want to talk about.
Well, I mean, there's not much to talk about. I like to talk about it, but we'll throw the spiders up. Q's had a pretty good puke last week as well. But let's zoom in just a little bit and start looking at some of these candles. I mean, yeah, the same lines lurk above that you've heard me talk about day in and day out. We had a little bit of a hiccup last Thursday of some selling, but actually Friday, I'm sorry, Friday continued selling. I should say the selling started Thursday afternoon, and Thursday afternoon. We did not get our 330 bounce that we normally seem to find in the way the dynamics have been in this market for the last few months. There always seems to be the mysterious buyers showing up at the last half hour to try and keep us going in the right direction. Well, that did not show up on Thursday, and it was kind of interesting to note, and we kind of raised a red flag on our Thursday webinar and said, you know, there could be some more downside here to try and back and fill and digest. And well, we did get a good further whoosh down on Friday, but we did get our stick save, as you call it, at the 3:30, 3 o'clock mark, where the buyers stepped back in on Friday there and created a nice little bottoming candle. That bottoming tail, you know, stayed intact. Not only did it stay intact, it touched those lines that we have of interest and filled the gap that we had on that little breakaway gap. So gap filled, back and fill complete. Sometimes those markets take 3 steps forward and 2 steps back to complete their ultimate journey up the mountainside. But we did follow up again with a green candle today. So, you know, for lack of better understanding here, everything is still intact. The dip appears to have been bought on Friday and followed through with today. So we're back in the range here as we were before, and those levels above, lurking just above, are probably going to be coming back into play here at some point. Just don't know how or when. But no follow-through whatsoever on the downside, and there has been limited follow-through on the downside in this market, especially this particular year. So that's what we got to work with. Buy the dip still seems to be in control, but we are going to touch on something going forward a little bit. Our go-to top list that we like to work with lately, the trend change lubricant, is really not spitting out that many choices. Very, very slim pickings over the weekend to try and come up with some ideas, including trade of the week. So there is a bit of a caution flag being raised there. Normally our trend change lubricator top list is just chocked full of good-looking candidates for that particular setup. But for this week, we only have, or today as it stands, when the market closed, our last refresh, we only have a small handful to really choose from right now, and that's kind of interesting because they've been they've been there, and they've been plenty of them to choose from. Lots of good setups to try and choose from, but very, very slim pickings here in the last few days. So that is one note of caution that I'm kind of bring up.
Right, Steve, and you know, as you were saying maybe a couple of weeks ago, we were discussing the fact that a lot of your contacts that you talk to, stay in touch with in the industry, were making the comments, you know, I'm starting to see some downside potential or some good, you know, short things starting to build. They're not quite there yet, but they're starting to materialize. And so these are all little things, these are all little tells that we can build upon, just like on this day right here, right? When we closed down into the open, right? So, for example, if we just kind of, and that was on a Thursday, right? So if I just stretch out the intraday here, so today, and then of course if we just kind of focus on Thursday for just 1 second, because the reason I'd like to point this out is it's one more thing that wasn't happening that happened on Thursday. And I think you and I were even having the conversation, you know, the day before. You know, when's the last time we saw the market really kind of sell off in the last 30 minutes or an hour?
It's been a while.
And it's been a while, and that's why, you know, as this was unfolding on that day, you know, I was just kind of sitting here watching it unfold going, well, funny thing is we were just talking about it, and sure enough it's happening again today. Now, does that mean it's going to keep happening? Who knows? It might and it might not. But the bottom line is, you know, if you're observant, we're starting to notice things happen that haven't happened in quite some time. And is that, you know, signaling a top? Who knows? We might be in a consolidation phase for the whole summer in this area right here, you know, maybe down to these lower extremes. But the good news is, regardless of what the market ends up doing, nothing should really change for us. And when I say us, I mean people using our technology, because every day without fail there's going to be something to trade. The trick is, where do we find it? Which brings us to our first action point of the Holly Trinity and the methodology, and that is, first off, we have to find the action. You know, so let's talk about that. So let's just go right into Holly today, because it was a very interesting day on a couple of different levels. Even though after everything was all said and done, we can see Holly was down about 97 cents on about 22 or 23 trades, I believe. So without further ado, let us dig in here. Okay, so once again, what do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 strategies, 2 of which were short, and the rest were longs. So Holly got busy pretty early today, you know, about 8 minutes into the market. Sunrise movers started picking out some longs. And as we can see, you know, these were the sunrise mover trades today. And, you know, pretty much some stops got hit on the time stops. There wasn't a whole lot of profit initially. Then Holly started putting on a nice little batch of longs about 30 minutes into the open. And of course, you know, looking at the SPY on the intraday today, you know, it wasn't the easiest day to follow. Make sure I'm on the right day here. Okay. Where's my little window? Okay. There we go. That's what I was looking for there. Okay. So, you know, here we start off. Hey, we're going down. Now we're going to spike back up. Now we're going to come back down. Now we're going to go back up. So not the easiest, you know, talk about the epitome of a choppy little market this morning. So, you know, we had a nice little mix of longs and shorts right off the bat. But as we can see from our trading P&L here, things just never got into a position to where a lot of traction was caught. And we can see it's kind of hard to see since this is shrunk up, but we did get up into the green here and then whoosh, right back down again. And it was just a fight for Holly, you know, to pare her losses today. So let's take a look at some of these trades. And what we're going to do today, ladies and gentlemen, and you've all heard this before, but there's been a lot of questions coming up lately about, you know, how do we act on what we call a trade around? Now, Steve and myself and Dan and Brad, you know, sometimes we get into, you know, we get on autopilot and we're just going a million miles an hour and we kind of make the assumption that everybody sees exactly what we're talking about. Right. But then again, we've all got 20 plus years of experience. So, you know, we do have to kind of slow it down a little bit and reiterate these topics, especially for the new people. And talking about the non-exit profit column here, and how do we use that in essence to what we call, quote unquote, trade around a position. So before we kind of leap into this, just to refresh everybody's memory, you know, Holly is your trading pal. She is your buddy that sits next to you every day that trades with pretty much perfect statistical probability. And of course we know, you know, not every day is going to be a winning day, as we can see here. But the interesting thing to point out is there was about maybe 3 to 4 points here that you can't see on this blotter, that you could only see interacting with Holly in real time and going back and reviewing like we're going to do now. We can see it in hindsight. But if you actually see it when it's happening and interact with it there, that's going to help you get better and better identifying these plays. So let's just take a look at the non-exit profit column here today. And the first one that I want to do is BHI. And I marked this up in yellow when I had black charts, so I can leave it like this, or I can just flip it to a dark background, which might be a little bit better. I apologize. I know we try to keep these on white for easy viewing purposes, but hopefully everybody can make this out. So let's take a look. BHI was triggered by the PB short strategy, which is a fairly newcomer to the strategy hopper. Was created a few days ago and made its birthday debut today. So looking at BHI, it was triggered about 36 minutes into the open, and we can see right here the white arrow. This is where Holly said to short it. And of course, it goes against us a little bit, nowhere near the stop out. And then 60 minutes later, which by the way is the hold time for the PB short right here, we can always look over. Actually, it's 45 minutes here. So the exit time was right about here. So as Steve and I always like to say, you know, if you've got your trader's hat on and you were short from here and the stock is doing this, there's really no reason for you or I or anybody else to get out.
Other than boredom.
Yeah, if you're bored and you just can't keep your fingers off of the keys, you might have gotten out and gone, well, I don't want it to pop back up. But see, from my experience and Steve's experience, when we see these little patterns here, I mean, that's got NR7 written all over it. So when I'm seeing this, I'm like, okay, it's tightening up. I think, number one, this strategy or this play was generated from a strategy that is touting 61% accuracy coming into the session. Of course, we all know everything's about timing, and we'll get into one of those, a different type of play about the timing and how you can capitalize on Holly's stop outs. But first, looking right here, Holly lost 2 cents, I believe. Yeah, lost 2 cents, getting out right here. So all we had to do is basically put our stops above these little wicks and wait for the pattern to continue. And had you done so, well, the picture speaks 1,000 words there. So that's why the non-exit column is reflecting now 76 cents, but there was roughly, the high of the candle here was 48.12. You take the low down here, there was at least $1 in this little downside move here.
Yeah, you got to remember that Holly has to start every day fresh, flat, zero. Nothing goes home, nothing gets taken overnight, so therefore there's no windfall overnight, but likewise there's no downfall overnight either. So it's essentially, one hand tied behind her back when you want to compare it to the rest of the market, because the rest of the market can gap up and enjoy a 2% gap up and go from there. But every day our AI has to start from scratch, and so we get to these situations where you see the time stop ticking down. Going to end, the time stop, exit in 1 minute, exit in less than a minute. And you look at a chart like this and you're like, well, there's really no reason to get out here. And the guys at Trade Ideas are always telling me this is a gray box system. The genius is in the ideas that are coming to us for trade ideas. The open-ended gray box idea, comes to us on our end as to how we want to manage these. The suggested stop, is just a suggestion. Now, that's different. I don't want to confuse you guys with timed stop. Again, timed stop is just getting out, and again, twiddling your thumbs is no real reason to get out just because the clock expired. The way this arrow is pointing up here, there was a lot left to be had if you stuck around. Now, I understand some of you guys don't want to stick around, but here's a thought for you. You get to these situations where you're in the money. It's not a losing trade. That's a whole different ball game, but you're in the money. You've created some profits here, and the time stop comes up to try and get out. Well, if you can't decide what you want to do, these are perfect opportunities to just sell half. You've locked in profit on your first half, and you're playing with, quote-unquote, the house's money. If the casino was the market and the market was a casino and that was the house's money, then, it gives you the ability to have a little bit more staying power and see if you can stick around for a better turnout. Now, by all means, if these are stop losses, you should not be looking at a stop loss saying, okay, well, we're down 50 cents and Holly's about 5 cents away from getting stopped out. But, I'm just going to go on my own on this one. Well, you really are on your own on that one, because more often than not, Holly's going to give us a good risk-reward, risk management, and that really is where the genius is watching a trader next to you that doesn't have emotions. They're just doing what they're supposed to do, by the book, every single trade, by the book, because that's where the statistics lie. And, Jamie brought up a good point, and I mentioned it last week. For those of you that golf, sometimes when you have a really good scratch golfer come into your foursome, it kind of elevates the rest of the foursome a little bit. You kind of bring your A game a little bit better. The osmosis of the power of the good golfer just kind of rubs off on you, and we laugh about that because that's kind of the same concept as trading side by side with Holly, the unemotional AI robot that only puts trades out when the probabilities are in line. So it's a way to try and get the deck stacked in your favor. It's not going to be perfect, but it is statistically profitable in terms of the probabilities.
Yeah, Steve, and when we're talking about our daily setups, you always like to say this thing's consolidating either by time or price, right? So
Yep.
When we're talking about trade arounds, this trade around, we're keying off the chart and where the chart was at Holly's exit time. So we're keying off the pattern here. However, let's look at Apple today. So Apple was one that was issued by the long strategy known as Beacon, and Holly promptly made her entry here and got stopped out. We can see it was a time stop that got her. She lost 38 cents. So now let's talk about the non-exit profit column and when would the trade around occur. And it's very simple. When this gets to zero. Obviously this was the same as this at the time the stop out occurred, 38 cents and 38 cents. So you see Holly get stopped out. You're like, oh, Holly got stopped out, lost 38 cents. How can I capitalize on this trade if the opportunity presents itself? So as we can see here, if we would have held that trade, instead of losing 38 cents, we would have made 35 cents. So what we do is we focus on the zero pivot point. In other words, all we do is input the entry price into our limit alert window, 93.38, so that you don't miss out on it. You know that when the stock gets back there, the non-exit profit is going to be at zero. So I hope that makes sense to everybody. So you can see I drew the line right across here, but I have not set the limit alert, but it would be real easy just to go, okay, let's create that alert, 98.38. And of course this would be a rise back up to the top, and we're going to go long, 0 point on the non-exit column. Whatever note you want to put in there to remind yourself that is what you're keying off of. And then we just save it. And then of course it's going to be right there for us. So that when that event happens, you can pull it up. And of course this would have been a pretty good little entry here because, as it cracked above right here, we had a nice little run up. Maybe you wait a couple of bars, you start to see that, nothing crazy is going on, and it reemphasizes, hey, I can still make some money on this trade even though Holly was stopped out of hers.
Yeah, the idea generation of these trades are really where the jewels are, which makes it perfect for what we call trade arounds. Maybe the exit was too tight or maybe it wasn't just right, but nonetheless the whole day is still open, and a lot of these trades still have some good moxie behind them in terms of what Holly saw as the statistical probabilities. So great reasons to constantly keep your eye on these trades. Don't just let them disappear from your board. Bring them back up, look at them, say, well, okay, I might be interested here, I might be interested here. And that brings up another good point, what we do at Trade Ideas and trying to extend a hand of valet and onboarding to get you guys up to speed as quick as possible. We realize we use the word trader's hat a lot. My trader's hat is over 20 years old, and Jamie's is about the same, and that's 10,000 hours, which is really hard to convey or build up in a short amount of time. But what we do have to offer is the live trading room. Barry is an excellent moderator and very generous with his time, not to mention a lot of great people in the chat room as well that are gracious with their time as well. So, you can always bounce some of these ideas off the other traders in the trading room, and I guarantee you're going to get some really good advice or ideas about maybe the way to play a certain setup. But, if you're not really the seasoned trader that you would like to be, please, by all means, continue to use the resources of the free live trading room. That's what it's there and designed for. And for those of you that are in there, I'm sure you'll agree, Barry does a great job of trying to be as attentive as possible with everybody's questions, especially relating to the product.
Indeed, and that's what we're trying to foster here, everybody, is it's not just we're making a scanner. It's not that we have a forum. It's not that we just have a trading room. It's that we have all of this so that we're fostering a community around our technology. So that, as, for example, for the new people, what we're saying here today might resonate. Maybe you're still a little fuzzy with it. However, all you have to do is attend Barry's trading room, and any questions that you want answered in a real-time environment as things are unfolding, by all means, please take advantage of that resource if you have not been taking advantage of it. And, over time, the trading room has grown, and it's still growing. And Barry, as Steve said, is very good at what he does. But then again, you're probably noticing there are some other people in there that are becoming quite the positive contributors. And that's what it's all about, is fostering community around our technology, offering training, offering these webinars so that we can continue to, foster these, good data sets and just overall good vibes for the Trade Ideas community. All right, let's take a look at a couple of more of these. GNC, another good one that presented some excellent upside opportunity here. Holly's entry was here, exit about right here. But once again, anytime we are in a position and we start to see a little peel off the top, of course, all of our demons are going to kick in. We're going to be like, well, I need to do something here because I'm not going to let this trade go against me. And of course, sometimes the wiggles aren't that bad. Sometimes they're a little bit more severe, like what we see here. But once again, the easy remedy to making that decision is peeling off half, giving the other half back to a break even, in which case, in this example, you would have been just fine, and you would have been able to squeeze just a little bit more alpha out of that trade to the tune of about 54 additional cents on whatever the share amount you had left over. So easier looking at these that actually worked right off the bat, but let's go back and look at some of the ones where the non-exit profit. Let's see, the Apple was a good one example, and the RCL. So RCL, 33 cent stop hit, ended up making 36 cents. So once again, we take this entry price here, 78.32, and that's where we're going to set our limit alert right here, 78.32. So she gets stopped out, it cracks back above over here. We've got additional opportunity to capitalize on that because, as we say all the time, Holly is the trader that sits next to you that you can learn from. It's a person. She is a person that trades with statistical perfection. And we all know it's not the holy grail, but it's the closest thing that we have in the markets. It's math and statistical probability. Holly steps on landmines for you too in these specific examples where she gets stopped out. You're like, hey,
let's look at an example. There wasn't a good example today. I think the worst trade, was pretty much statistically never really got much worse than that or much better. I forgot.
Right.
Yeah, Sanderson Farms, it was a pretty decent stop out. Didn't go much lower, but there are many days where we see those stop outs. For instance, the one there at PCTY, stopped out at 39 cents, went on to become an 81-cent loser. More often than not, I don't want to play as an individual wearing my trader's hat looking at these trades. Like I said earlier, I don't want to try and second guess too much the stop loss. The stop losses are calculated by the smart stop system, and we usually want to pay attention to those. It's the time stops and the ones that are in the money are the ones that you may want to reevaluate and see if there's a better performance ahead on those, or like I said, even just sell half to try and satisfy that mental urge.
Indeed, and going back to the trading office example, I was talking maybe last Thursday about a guy that used to sit next to me, and I'd always capitalize on his trades where he's over there bitching and moaning about something not going. I'd simply wait for the right time and just take the other side, and it would work almost all the time. Well, this is the same concept, except instead of being in a physical office, Holly is the guy sitting next to you. And when you see her get stopped out, a lot of the times it just sticks out like a sore thumb. Maybe you're looking at the daily, and Holly got in, got stopped out, but then you pull up the daily, and you're like, well, unless it really goes down and breaks yesterday's lows, I think this is a good long. So I saw her get stopped out. She lost 35 cents. You can capitalize on that, get a better entry, and maybe have a trade that continues to work for you. So the biggest takeaway here on the non-exit profits is we're focusing on the ones that got stopped out that ended up being green. Of course, when the market is unfolding in real time, you can't just immediately go, well, I would have made this or I would have made that. But all we have to do is pick the entry price and set our limit alert for that stock, and that's how we play the non-exit profit game when the market is live.
Yes, sir.
Okay. So does anybody have any before we move on from the non-exit, does anybody have a question? Is everybody clear on what we're trying to, on the picture that we're trying to paint here? Anybody have a question, just go ahead and ask before we move along here.
Well, are you working on fixing the crosshairs interfering with chart markups? I don't know if we're working on that. I think what he's alluding to, HB, is that a lot of times for the chart markups, we need to turn off the crosshairs to really make that work efficiently. I happen to like the chart crosshairs, so I am turning them off and on quite a bit. But I will.
Right, and I'm the same way here.
Yeah, I think, you know what, it always helps. Let me just say this, HB, it always helps if it comes from outside the group rather than inside the group, because we have info@trade-ideas.com, and you could select feature request in the message column, and all of these feature requests are great ideas, and they get put and stacked and they get prioritized back in the development department to find out what is the most pressing urgent next feature that needs to come out in the release. So the more we hear from outside the group on those emails, the better. But I don't have an answer for you of knowing whether or not it's currently in the queue to be worked on and made more simple, but it certainly wouldn't hurt. Email info@trade-ideas.com with that feature request.
Yeah, and if everybody just directs their attention to this chart real quick, I'll give an example. What I did just now is I right-clicked and I just went to markup. I threw an arrow out there, and then I put a text annotation. So right now, I can't do anything with these guys. I try to grab them, I can't grab them. So to manipulate these guys, what we first have to do is come back to properties. We remove the crosshair. Now, I can pick these guys up, I can move them around, I can spin them around like this, or I can change the color of the annotation. I can say I want that guy to be yellow. Okay? And then I remember a user from one of our last sessions was like, well, what if you want to delete them? Well, you have to make sure that you right-click and hold it and then hit the delete key. Well, I might have spoke too soon on this one. There. Okay? But you have to do all that stuff making sure that your crosshair is not on. So,
Alan asked an interesting, I'm sorry, I'll wait for you to finish.
No, that's okay, I'm done.
Alan asked an interesting question regarding the AI Holly. Basically, if I understand the question, I think he's saying, is it possible that Holly could get into more than one trade, more than one alert for a trade? And that did happen. Asking the question, we had the same stock show up in two different strategies last week. It was dry ships, I believe, and it's too late to go back now and look at that. But to answer your question, it can happen, and it does happen occasionally, where you see the same symbol in two different trades that triggered under two different strategies at two different levels.
Right, and in that case, I believe it was long, and then that long was in the money, and then pretty much at the top of the, what looked like the top of the chart, the other strategy went short.
They both made money too, which was great.
Yeah, and they both made money, which in essence, I actually like it when the system is, or not the system, but when Holly. That's the first time I think I've seen her do that. I've seen her double up in longs before, but never be in a long and then go short. It was a pretty cool trade actually.
Maybe, if I didn't understand your question correctly, it's possible I didn't. Let me know, Alan, but I think that's what you were saying. But sorry if I didn't catch it correctly. Okay, what next?
Okay, so just to recap one more time, focusing on the zero value, going from a red negative number to that zero value, which is going to coincide with the actual entry price. So see, that makes it a lot easier. Okay, so using Holly as one of our windows, along with our top list and our alerts, that's where we find the action. Consult our charts for the footprints in the sand, and then use our limit alert windows to act upon the action. Pretty simple, pretty straightforward. But, don't like to beat a dead horse or anything, but, when people like Einstein and Leonardo from the past, which, are considered to be pretty smart dudes in today's society, that's always the motif, simplicity. So really, it just doesn't get any simpler than what we're illustrating for you here today. But just like anything, I could say, I could say golf is a simple game. All you have to do is pick up this club, hit that white ball down the field a couple of times, and try to get it in that hole. Sounds simple. Much simpler said than done. But this methodology, using all of these windows, using Holly, the top list, the alert windows, the charts, the price limit alert windows, it's just like playing a musical instrument. Do you think for 1 second, if you've never played the guitar and you bought a guitar, that you're just going to get a book of music and 2 or 3 days be pumping out songs? Maybe 1/10 of 1% of the population would be able to do that. But for most of us, it's going to take a little bit of practice before we're scratching out Smoke on the Water, all right, or Stairway to Heaven. And the same thing applies here. But the good news is you've got plenty of teachers around. You got myself, you got Steve, you got Barry, you've got the instrument, and you've got the sheet music. So all you have to do, just like Wayne Gretzky said back in the day, you just got to show up, Lord knows I wasn't the best studier in college. I got through it just by showing up every day. And that's what you have to do here, is you have to show up and you have to repeat these steps every day, without fail. And before you know it, you're making some pretty sweet music.
Somebody had a real good question a second ago. What's the difference between a stop price and a smart stop? Essentially, they're both one and the same, but the smart stop is proprietary to us at Trade Ideas. It's the AI coming up with a value based on, some of the proprietary analysis of the propensity for the stock's volatility, the average true range, and things like that. So it's kind of one and the same. A stop loss is a level at which you code the trade to be a loser and you want out. You give that stop loss order to your broker, but we call it a smart stop because the stop loss was calculated and derived based on the technology of the AI coming up with some different scoring to give you the suggested smart stop. We call it that.
All right, Steve.
Okay.
Wow, I mean, are we in a time warp today? Because I just looked at the clock and we've got 20 minutes left and I thought we were only like 20 minutes in. So I want to get to Mike's question about the optimization, but we also need to take a little bit of time here to kind of talk about how the action in the trend change lubricant type setups has been slowing down. And obviously it's because we're at the top of the range, and a lot of these things we could call, a lot of these trend change lubricants that we've been picking up over the past month, we could say that those were the tail end of the snake, the middle part of the body and the tail as the head moves, and then the body has to wiggle to catch up. We've been catching all the wigglers, that were at the back of the body or the tail, but now that we're getting back to the top of the market, those types of guys aren't as nearly as abundant as they once were. So let's see, bear with me here. So the trend change looks a little anemic today. Usually we have, stocks way off the list, things staying full most of the time. But Steve, any comments on how we might be able to keep the search going? We've taken this little guy right here and we've modified him from the 20-day range to the 5 and the 10-day. But, all those ranges are being, stretched out as well. So I think it's just a symptom of the market.
I think that's my point. Yeah, I think it's a symptom of the market, and again, that raises a little bit of caution for me. For a good 2 months now, this top list has just been chock full of interesting setups, and all of a sudden it's not. I don't necessarily know specifically what that means, but it's a change in something, and so it's being duly noted that a lot of these setups to the upside, to the long side, are kind of disappearing here off of this this top list. Maybe it's just a short-term anomaly, maybe it isn't, but it's certainly of note that I wanted to bring it up because it certainly has dried up a lot here in the last few days for whatever reason.
Yeah, and I think it's just it's just a symptom of the market being up at the tops, and we're going to have to, let the market do its thing. And here we are Monday, Tuesday, Wednesday, Thursday could tell us a lot. Whether we go test those tops or stay in the range, which I mean, done this lots of times before. Once we get up here, approaching summer months, maybe we stay in this range, maybe we don't. But regardless of the what the market does, we should be in good shape. Okay, so we've got 15 minutes left here. How about we jump into the back testing that Mike was asking about? And I see we've got some other questions here too, and we'll do our best to get to those as well.
Okay, I'll do my best typing out some of these questions as I can. I see somebody's asking for kind of a breakdown on that new alert that was out there called Top Predators. Do you have that one on your screen by chance?
You know, I had that one, but I wasn't going to really showcase it today.
Okay.
But I've taken a look at it. That was one that Dan came up with maybe last week. So I just kind of perused it. I haven't really delved into it yet. But if my memory serves me correctly, it was showing you stocks that had big moves on the day, right?
Yeah.
Of course, I was looking at it in the middle towards the latter part of the day. So obviously to actually be there and take advantage of, you would have had to have been watching it since the open. But what that little list is doing is, you know, when I looked in retrospect, it was showing me these stocks that just went on these huge rips today. Very similar to what you might see real quick here. I'm going to put this aside for back testing purposes. But what do we have here today? Oh yeah, HIVE, which this little stock right here, hey, if you would have gotten long, you know, pretty close to the open, 5, 10, 15, 20, even 30 minutes in, you get a nice little ride here. You know, a $5.80 stock goes up to $6.25. Not a bad little percentage move there on this little stock right here. And once again, you know, people always look at a top list and they're like, well, this is just a list of stocks that meet these filter criteria right here, right? Okay, that's all fine and good, but see, the real value in our top list is being able to take a list of anywhere from 100 up to a maximum of 1,000 stocks on this list and being able to resort it just with a double click, like, okay, currently we're looking at this column, greatest to smallest. So it's showing us stocks that have moved the most in a 10-minute period. You know, ask yourself a question. Is there another platform out there that allows you to do that?
Nope.
Oh, if the 10-minute move isn't your bag, what about stocks that have moved the most in a 30-minute period? Well, all we'd have to do is click right here, show the column. Now we can monitor in that time frame too. We can monitor in whatever time frame you want. You want 30, you want 15, you want 10, you want 5. How about 2 or 1? Well, all you have to do is insert that column into a top list, and you can do that. And see, a simple sort seems just exactly that. But when you're talking about a list of up to 1,000 stocks, being able to immediately sort by ones that are up the most or ones that are down the most in any time frame, I mean, ladies and gentlemen, that's power. It looks simple, but under the hood, it's a 12-cylinder engine that you have access to. So, you know, once again, oh, well, we're looking at this list for changes in the 30 or the 10-minute. Okay, well, how about I want to find now all of the stocks on this list that are experiencing the highest 1-minute relative volume. So, you know, 100 is normal in this column. You know, Hive towards the close was doing 31 times normal 1-minute volume. So, you know, there's a lot of power in these top lists. You just have to, you know, get used to them and realize the power that you have right at your fingertips.
Well, if Jamie moves on, somebody's asking about the Holly's must-watch list. I'll be happy to go ahead and pop this collaboration in the question box as well, so stay tuned for that. All right, Jamie?
Sure, and okay, Mike had a question about optimization. So I'm just going to take my little turbo breaks down window here, which is about as simple as you can get, looking for stocks hitting lows with accelerated 1-minute volume. New low is the trigger. So, you know, let's just do this. Let us back test this, starting 30 minutes after the open, and we'll let it run pretty much all day till the last hour. And we'll just pick a random intraday time here, 45-minute hold time. We can always apply a little bit of risk management here, but no profit target, especially, ladies and gentlemen, when you're doing a new scan to try to find something completely new. You don't really want to use a profit target right off the bat because you wouldn't want to cap your upside. That way we can see what our average winners and losers are coming out with a little bit of stop loss. Sometimes I don't even bother with that, but we'll leave it on for now.
Okay.
And we'll pick a random time to back test here. 40 days out of the 64. That's right about 2 months on the calendar. Okay, so here we go. So obviously when this scan is done, we're going to have a gazillion trades come back, probably somewhere pushing 4,000 or so, which while this is happening, think about that. 4,000 trades are going to come back roughly. You could never get it done in a million years manually.
No, you can try and do this stuff with other platforms, but you got to be a good code writer, and they have their own language you got to learn. This is pretty simple.
Easy language that's not so easy? Yeah. Okay, so pretty close to 4,000 trades here, 3,978. Interestingly enough, they're still winning 51.4% of the time. However, we always want our average winner to be bigger than our average loser. Not the case thus far in this bulk scan. So if I wanted to try to optimize this, of course we could come over here, we could go off some of the basic stuff like price, time of day, and symbol. And of course when something like this, this jumps right out at us, we could eliminate all this, but then we wouldn't have any trades, but we could focus on these guys. Probably not the most efficient way to do it. Or we could just say stop at 729 and then go in and look at these guys. Or of course, as some of you know, there's some really, really, really good data sets and back tests that you can put together using custom symbol lists, because all stocks are like people. They've got different personalities. And there are some events where those stocks work better than others. Now, Mike was asking about the other filters category, in which case this drop-down menu here shows every TI filter. So why don't we do this? Why don't we start with some S&P change type metrics? So what I just clicked on here is the change in the 5-minute period for the S&P. And what jumps out right off the bat here is when the S&P is showing these values, no worky for this strategy. So if I wanted to get rid of these guys, what I would do is I would come in here. All I have to do to change these settings is right-click, and then I could say set strategy min value of S&P change 5-minute to -0.1. Once I do that, it automatically pulls this up so that all we have to do is click OK, OK, and then get back to business. So I went and installed minimum value minus 0.10 there.
Now, just to jump in, Jamie, that was not a value that you had previously set, because Lisa's asking a good question. Do you only have to choose from the filters that you have already set up?
Well, that's a good question. Now, when I run the back test and I come to the advanced section, notice this, columns and results. So I'm saying use my favorites, which I've checked off every filter as a column. Okay, so that's how we get the system to load all of the filters into this area right here. Because if we had just used the columns from the strategy, like so, it would only use the columns that we're displaying in the strategy, and only those would show up here. So if we want them all to show up, we add them all. That way we can go back and peruse and optimize by each and every filter. So no, this was not a setting. If we just kind of close that or move this out of the way and go into the configuration of the actual alert window, then we can see here, this was my base. Well, if my window will change panes for me there. Good girl. Okay, so these were the original filters up here, everything above here. You can see I just added that filter there with the optimization tab. Okay, so we're going to eliminate approximately 436 trades there that would have not produced and lost a big chunk of equity in that strategy. So then we just kind of keep on going. Okay, what about in the 10-minute? Okay, once again, just like in the 5-minute, we can clip all these guys off by setting our minimum value in the 10-minute to minus 0.20 simply by right-clicking, checking here. We can see, okay, that's the value that it's going to assign. Okay, okay, and boom. And then we continue this process. How about the 15-minute? Now the 15-minute, I do see some red here. So we have to make a choice. Okay. If we go through here and cut it off right here to get rid of these trades, is it worth it? Or is it better just to leave this in here because, you know, we can't get rid of every little red blurb. So, you know, that's just from trial and error. Maybe we go to the 30-minute and see if anything stands out.
It's kind of like a steak. We got to find the areas around the edges that we can trim the fat off, and we can't really go cutting through the middle so easily.
And so typically when I make 2 or 3 filter additions, I always like to come back and just rerun and go, okay, based on the changes that I've made thus far, you know, what kind of impact have I made on the strategy? And we can see here we didn't really do a whole lot to reduce the trade count.
No.
Which is a little bit odd.
I did notice something. It's not so much pertinent with Mike's question of the of using the filters, but I think when you were going through the optimization, the time of day had a giant block in there that we could cut off, and it's going back to remedial basic stuff here.
Yep.
Well, let's just take a look. Time of day. Yeah.
Right.
That second half of the day looks like it's got, but yeah, once again, the majority of those were in the early part of the day.
Right. If we did say stop at 7:29, because that's, you know, this is.
Let's see what happens.
Walking this path will show you all kinds of different things from.
You can get lost in the rabbit hole for sure.
But this is just such a big step right here, a big sample, that even though we're shaving 400 trades here or trades there, the odds maker is going to cap out its maximum trades at 100 per day. So that's why we're close to the max right now, because 40 days at 100 is close to 4,000. So even though we're doing some trimming here, the set is so big that other trades might fill in. You know, if we were maxed out at 100 trades on a day and we shaved it down, you know, knocked 30 trades off, well then there might have been more than 100 trades, so that's why it's refilling back in. But the bottom line, you know, the song and dance is the same. A lot of the times things will just jump out at you, you know, and we can just scroll through these, because once you get in there, you can just kind of use your mouse wheel to scroll. Okay, nothing stands out here. 2-minute RSI, yeah, I could knock off one trade, but it just really doesn't seem to have a big impact. You know, if we were focusing on the 2-minute RSI, it seems like most of the juice is in these settings right here between 20 and 49.99 max. And we keep, you know, we can keep scrolling through here because you never know what you're going to find.
Yep.
So we could lose 51 trades by installing this filter, right? So it's kind of like an Easter egg hunt here. You know, you never know what you're going to find in these guys until you start scrolling through these filters and going, okay, well, I'll clip these, I'll clip these, I'll keep the green. Next filter. What are we going to find? Anything?
And again, guys, this is what Holly's doing every single night just to drive the point home. This is the platform that the AI is using, and this is the strategy, not the strategy, but this is the optimization method that the AI is going through every filter on most of these trades and strategies and trying to find the best optimization 1,000,000 times quicker than we could do it with our own human eyeballs and our own brain.
Exactly, and that's why we invented Holly. That's why we invented the algos that actually do the back testing and do exactly what I'm showing you here, but like exponentially faster, you know, thousands of times a night per strategy. So that is what Holly is doing, is this exact process, but she can do it exponentially compared to me, you, or even a team of me's and you's. Okie dokie.
Yeah, the last question here, is it even possible to over-optimize? Can you address that? I don't think it's possible to over-optimize, Ricky, but what I will say is for those that are familiar with optimizing and the term curve fitting, we avoid the curve fitting by, going in and tweaking and throwing every little switch to make it look perfect in the sample data that we're using. So when we do this every evening, Holly is using two sets of data, the in-sample data and the out-of-sample data. The in-sample data is the one that's constantly being retweaked, reworked, and filtered and refiltered and optimized. And then once that in-sample data has given a good score, it moves over to the fresh virgin out-of-sample data, and it's run, and the score is taken from the out-of-sample data. And the reason that's done is to ensure that it's not just curve fitting, which is the word to use to customize the results to the way that you really want them to be seen. So using in-sample data and out-of-sample data is a way that we try to avoid the curve fitting scenario.
All right, one more thing to add to that is, we're event-based. So now, no matter how big or complex this string of filters and alerts is, it's nothing more than the event we're looking for. So we're casting that event out to the market so that anytime a stock in these exchanges exhibits this event, then that's when our system is alerting you to it. And by the way, I shut down my panel here, but let me just run it one more time, because that's the first big difference between our backtester and everybody else's. Now, another big difference here, when this run gets done here, presto. Okay. Another big difference is that most backtesters out there, notice there's 3 equity curves over here. Now, the black one is gross, but, correct me if I'm wrong, but everybody pays commissions, right? So there's always going to be a big difference between your gross equity curve and your equity curve after commissions, and what we like to call slippage. In other words, very rarely, if you see a signal come across your alert window and you take the time to pull it up on your chart, you look at it, the risk is in place, you really like it, and so you act on it. Maybe 5 or 10 seconds has passed, but very rarely are you going to get the same price that the computer is marking as its entry price. It's what we call slippage. Maybe you paid an extra 5 cents, but you still like the trade. So really the only equity curve that matters is the lime green one, because that's inclusive of slippage and commissions. And I haven't really seen any other backtesting modules that let us fold this information in, which that's a huge, huge factor moving forward.
All right.
All righty. Well,
hour goes by quickly, doesn't it?
It did. I've been in a time warp all day. Time is just compressed today. So, unless we have anything else to discuss here, I guess it's time to bring in Mr. Scott and let him tell the audience how they can benefit from attending these webinars.
Yeah.
Some nice coupon codes.
I know there's a few people in here that aren't currently subscribers, and as we move further into May, we're going to have some more information on pricing. There's going to be some pricing adjustments and changes. First, I'm going to talk about where we're at right now and the specials we have, and then explain how things are going to change. We just don't have a date on the change yet. So we're a software as a service company. Our core model is our subscription. It's monthly, $99 per month, and that includes all your real-time data. It includes exchange fees and charting. Very importantly, also a full hour of one-on-one training with screen sharing. As soon as you subscribe, go directly to the support section, click on the training link, and pick your preferred time and date. It's a great way to get started. Of course, the annual is a savings over the monthly. It's only $888 a year. Saves you a whole bunch over the monthly, includes all the same great stuff. Now, to get access to the AI and the backtesting tool, the odds maker, requires the purchase of a one-time $1,100 license. And this is going to be what's going away. Now, this is a great time to get into this because you can get the lifetime license and get locked in without having to pay for it on a repeating basis. At some point at the end of this month or in early June, we are going to have the same subscription prices, but we're going to also have a higher tier that includes the AI. So it'll be around $200 a month, including the AI, and about $1,900 a year, including the AI with the annual. So we'll have 4 prices. We'll have 2 monthlies and 2 annuals, and we are not going to continue to sell the one-time license anymore after we pick that date that we make it stop being available. Now, those of you who are currently subscribers on the monthly or the annual, don't worry. Whenever you decide to get the AI, you're going to be grandfathered in and you can purchase it for the 1100, just like we've been letting it go for years. I mean, the backtesting module, the odds maker for years, but now it also includes the AI Holly and our pricing alerts and all that kind of good stuff. So now on the next slide, I have a code for you to able to save. So use the code HOLLY4, it's all capitals, HOLLY, before the end of business on Friday. And that lets you save half off your first month, 20 off your first year, or 30% off that AI odds maker license, which is going to go away at by the end of the month or beginning of June. So you can get the odds maker for life and the AI for just $770, and all you need to go along with that is a subscription. We recommend the annual. This same code takes 20% off your first year, so you get the first year for $710, and then you're locked in at renewing at $888. Or try the first month, just $49 for the first month. There's no contract. Sign up for the training. Go to Barry's trading room and really get a great head start. So there's also a combo link that we have that lets you buy everything at once if you want to get the year and the AI at the same time. Likewise, this will be going away when we do that price change, but up until that, we are going to be presenting it as an offer for you. So it's use the code, use that link, bit.ly/AI Holly, all caps, and actually take a look at your GoToWebinar interface. There's a handouts panel right there, and there's a PDF link in there. Just download that. It's got these same links for you. And unfortunately, at the very top, it says 1431, but that should be 1480. What the code does when you use Holly4 at the checkout, that takes that 20% off the year and the 30% off the AI, dropping that 1988 total down to 1480. And again, remember, this gets you lifetime AI and then renews at 888 every year, whereas after the change, it's going to be 1888 or 1988 for the year to include the odds maker and the AI. Obviously, that winds up being much more expensive on the renewals compared to the 888. But we're bringing such a huge value to everyone right now that we do feel like the price adjustment will be earned. There will be more details about that moving forward, but just so you know, you're not going to be able to get this deal after the end of May, beginning of June, once we do actually set the date. There's a little bit of programming we have to do on the back end to make these happen. Any questions, email us, info@trade-ideas. Yeah, Kim, you're grandfathered in. So if you decide to purchase the AI and you currently have a subscription, we'll let you purchase the 1100 even after we do that change. However, new people signing up will only have the choices of the 2 monthly and the 2 annual tiers. Yeah, well, Kim, if you have the 99 a month or one of our other annual packages, you're grandfathered in. So you can get in on that. Any questions at all, email us, info@trade-ideas.com. There will be a recording of this up later tonight or tomorrow morning. Thanks for joining us. We got 2 webinars coming up on Wednesday. You should be getting invitations if you're on the distribution list for those. And also on Thursday, we have another educational one for you, too. Keep an eye out for sign-up links. Thanks, Jamie. Thanks, Steve. It's been good.
All right.
Thanks, everyone. Have a great week.
Yeah.
See you next time.
Cheers.